Hi guys, it's Wednesday, 27th of September, and I've done a little trade this morning, which I'll show you. It was done in Euro US. It could have been done on the Pound US, as those are the two pairs that I currently trade. I normally trade them on the London Breakout session, as you will know in my past videos. So, London Breakout session is basically the breakout from the Asian session. So, it's when London starts. So, London starts 8 o'clock UK time, and luckily I'm based in the UK, so I tend to trade any time after 8 o'clock UK time for the London session. Now, on the chart here, we have the US. Each of these candlesticks is 5 minutes of 8. I also put a few indicators on as well. A lot of traders don't use indicators on London Breakout, but I find it help me reinforce my decision-making process. But just to explain here, this line here is the Asian session, and this line here at the bottom is the low of the Asian session. All along here from midnight to 8 o'clock, and what you can see here, I'll move back a bit and get into this is the Asian session, goes on with the Pound US and Euro US. If you get a breakout London opens, it tends to give an indication of which direction the price is going to go in. And that's either obviously up or down, or sometimes it stays in a range. But normally you do get a big movement. It might not last all day, but I'm only going for 7 pips. In this instance, I'm just saying 15 pips. And what I do, and this is what I did this morning, it broke out the top there after 8 o'clock. It broke out here. But you can see on this 5-minute candlestick, you get the wick where that line is. And that means it's going to come back down again. So I waited, and then I got in here at the next one. I got in 10, 5, 19. Now what I do is I set the order, a limit order, 15 pips. With my trading stop at 15 pips. And the trading stop will move up 5 pips in my direction. As you can see, this big candlestick here, but 95 minutes. This is unusual. It's about 25 pips. So I got stopped out before it even reached the top. I could have got about another 20 pips, but I wasn't to know that. And I always check with forexfactory.com to there's any news reports that would indicate that this, could push the price up. There was nothing to indicate this. And that's the thing about trading. You can think you're an expert, on a particular forex pair or on the market, but sometimes the market will surprise you. Often it does, actually, and this is what happened this morning. So, I didn't. I could feel bad that I didn't get another 20 pips, but I got 50. And as you can see, it actually started coming down again, and it would have stopped me out probably about here at 8:55 in the morning. It's in range, and then again, we didn't break out until about half one as we come up to the US session. The US session starts, and you can see it starts coming back down. What I wanted to show you was the indicators on here. So we've got the moving averages here. The low is the 100 EMA. That's a long-term moving average. We've got the brown one here, which is the 21 moving average, and the black line, which is the 6 moving average. So this gold one here, this EMA, the 100 moving average, I don't use it a lot of time because I'm trying to get in and out. I'm trying to profit. I'm not looking longer term. But the fact that the price over it is an indication. It's telling you that the price is on up. I'm probably going to stay for a while. I concentrate on the 6 and 21. When the 6 is the 21, then I know to buy if it's on the up. It goes down below itself, and you can use that negative point. So I could have got in here actually at 7:10. Unfortunately for me, I was still out on the run. I was doing my 10-mile run this morning, so time I got a bit late. But I mean, this has gone up today, but it doesn't always go up like this for 8 o'clock. So I wasn't too worried. I wasn't getting too late. So I got in here like 50 pips, but I did a lot more. I've been down here with 10.489, and it's gone up to 10.540. So we're looking at 50, 51 pips. But at the end of the day, I made to make got some pips. And that's the main thing. I can't get all the market all the time. Down here we've got the MACD, and the MACD is very similar to the moving averages. And the blue goes above the red, that means the price is going up. When it comes down, it means the price is going down. You've got the green bar, see the price go up, the bigger the bar, the bigger the price movement, and the red coming down. You can see here, it's sort of symmetrically moving time with the moving averages, although the MACD does tend to get out a little bit early. So if I was to that trade here, it did back up again and could have gone all the way back up again. The 16 across the 21. MACD did, so I probably would have panicked for that anyway, break even. But there was another way I could have traded. It depends on your trading style and what you're looking for. So there's a 15-minute part. So each of these candlesticks now represent 15 minutes. So the other minutes not to that. And as you can see here, 80, obviously it goes up here. So we would have got in maybe at 59, it comes down a bit. But then, we're going all the way up here now. This is live at 10 to 4, coming to the end of the London session. And it's 10.579. So 39 pips. Or you could have got down here, when it crossed the 100, 6 across the 21, it's gone up. You could have got in here, and that'd be 49491, and 49180. That's 89 tips. But the thing about it is, you can't guarantee that obviously the price will keep moving up. Obviously, the indicators tell you it is. But they can reverse it on a 15-minute time frame. The thing is, you have to put a stop in. And this is where the other indicator I've got is a launching channel. And the blue line here, but down here at the bottom, as we're buying, looking at the price going up, you need to put a stop in here, and it's in the top, should be around where I put my line in, which is the 80. If we're to get in here, say if for example, where are we? So that's 8. So even if we can just at this bottom of 8 over 11, we need to stop here at 73. So we're looking at 20, 30, maybe 38 pip stop, whereas I'm putting 15 pips in. So it depends on the size of your account, for example. You need a large enough account. Either out, you've got to drop your lot size, or in mine, it's the pip size. And you're banking on getting more than, say, for example, 10, 15, you're looking at probably at least 20 tips. That's in my opinion. You need to trade for a longer period of time. For example, all day, instead of just getting in and out quickly. If you get in and out quickly, even on the 5-minute chart, I should have set my stop. Technically, I should set my stop here. At the bottom, my stop should have come here, which is 4 maybe that feed. But keeping an eye on it, I'm looking to get in and out, just get 10 to 15 pips. So, this is saying there's more than one way to skin it out. And if you look at longer term, if it's done on a 15-minute chart, if you've got a big enough account size to withstand the stock, because you're need to put stock in first and first, it's all about risk management. Today fairly smoothly, but we take that back to yesterday, which was actually because today did start going up at 7 o'clock. We're here Tuesday, we're at 7 o'clock, where are we on the EURUS? Okay, so this is Wednesday. This is actually really flat along Tuesday. Well, Tuesday. As you can see, Tuesday at 8 o'clock. So it's all up to 8 o'clock. We can break out about 8:20, and it's only just above the 100 and above the 21. You see, you get this big break here with the MACD. So it doesn't always do like what it's done today. So you can keep yourself thinking, well, Should have gone for more pips today. I could probably maybe got about 80 pips. If you do that, about £5 pip, that's £400. But you can't think like that. You've got to think of certainly for worst case scenario risk management. And at the end of the day, it's far better you stuck to your system, your trading plan, and you know, I don't want to try to say what in the day is money and he's made money, and he couldn't afford to tell, for example, that this particular trade that he was in was going to skyrocket, and that's very true. You can all the indications well can't necessarily tell. You know, I've seen it move very quickly, especially on 5-minute candlestick there. MACD and the moving averages can reverse very, very quickly in the price on down, and you lost what you had, and you went into a loss. And I just want to say actually because the USD and the trade pairs are moving in the same direction. Almost with the pound US, but with the pound USA. So here 8 o'clock, it's just about gone out. 12:06:09. But then it's come all the way down to 9.2, so I would have been stopped out. I would have made a loss there. And you can see here the MACD, which always seems to move a little bit earlier than the moving average, is always saying it's on a sell here. And okay, it's gone up now, but it stayed in this range and it hasn't gone up until 1:30, about an hour before the US session kicks off. So, you know, looking at the positive side of things, I would have been worse off if I'd gone with the pound US. So, like I went to Euro US, yes, I got pips. 15 pips is still 50 pips. At the end of the day, you know, if you're getting what you out there, which I said, out to 15 pips, then you can't be thinking what would have been, because it doesn't always happen. And I say you can't always get the whole of the movement, the market movement. No matter what indicators you use, how many indicators you use, with 100% certain what's going to happen, and you will get losses. So to minimise your losses, grateful for any wins you get. So if you have a look at the US dollar basket, and this basket of currency measured against the US dollar, so because the euro was going up, then the US dollar bar is coming down, and you can see it's come down here below the 100 moving average, the gold, and the black 6 has gone down over the 21, and you can see it's coming down, but we're dodging down along here as well. That's the highs and lows of it. We've got the MACD here starting to come up again, crosses, but generally it's on down, it's back up again, now it's come back down again, it's come out. This is on a 5-minute candlestick chart. Yeah, again, you can see that on the higher time frame, on 15-minute, even on 15-minute down. And that's because the euro and the pound will be going up today. So it's going to obviously move in an inverse direction. And I like the US dollar basket because I think it gives a good indication of the strength of the US dollar. And you can see, you know, if the US dollar basket going down, then 9 times out of 10, technically your pound will be going up against the US and the euro will be going up. Conversely, if the US dollar basket going up, then it's more than likely the euro and US will be going down. But at the end of the day, it's all about setting your time frame correctly, your stops, deciding how much you want to get out of the market, being happy with what you get out of the market. And that's just, you know, it's just my humble opinion. You know, that's the thing about trading. The traders do it differently, and there's so many permutations, and it can drive you crazy. And if you think about what you would have won, or what you could have done, or what could have been, you know, there's this fear of missing out. There's always going to be more trades.